Good afternoon. Welcome to our weekly livestock market update. I'm Brownfield News Anchor reporter Megan Grebner. With us is University of Missouri Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
As we get started this week, we talked last week about cattle on feed report, and we're interested to see how things kicked off on Monday. And it definitely started the week on a negative note.
That's exactly right. When you look at where we were in cattle markets on Monday, we started down pretty hard, and I think the cattle on feed reports sure had folks' attention. But as we've moved through the week thus far, it's been, frankly, a pretty good week, and we haven't seen a lot of fed cattle move to this point. But I expect we're going to talk about higher fed cattle prices when we end up this week. Feeder cattle up for the week as well, 1 to 3. I see a few outside of that 3 range on the upper end. So despite what started as maybe was going to be a negative week, it's ended up fairly strong. And when you look at where we are on futures markets, we've locked limit up on Thursday and in almost all of the contracts for both feeder cattle and live cattle. And we can talk about prices that are nearly $6 higher in some cases relative to where we started the week on the cattle side of the markets.
And I will say we're taping a day early, so market information is through Thursday on the close. As we look at the markets overall, are we surprised to see that rebound so quick after Monday's slow and negative start?
Yeah, so maybe a little bit surprised, I guess. But, you know, we've talked a lot about the difference between where cash prices have been and where futures prices have been on the cattle side of the equation, and the fact that futures have really drug behind where cash cattle have been trading. So I think we're seeing a lot of narrowing of that difference here in a week like this week. That is part of the reason why we're seeing such strong price growth when you look at where the futures markets have been for the week.
As we take a look, really not a lot of reports and those types of things to talk about this week, but cold storage numbers came out on Monday. And I like to think that that's pretty good news for the livestock sector.
Yeah, boy, it's we always seem to be back on 1 week supply and the next week demand. And for me, when I saw cold storage on Monday, that got me back to the demand side of the equation. When you look at frozen beef stocks, we were down 4%, boneless product down 5%. We can no other March going back all the way into the 70s, with the exception of 2003, showed the kind of monthly decline that we showed on the beef side out of this last cold storage report. So it tells me the demand side's moving product, and we aren't seeing anything back up. Even on the pork side, down 10% relative to a year earlier. Also a decline in pork stocks relative to where we began the month. When we look at pork belly stocks, they did increase by 4 million pounds relative to a month ago, but that's still down 68% relative to a year earlier. So those stocks of pork bellies remain fairly tight. And we do see frozen chicken inventory still high relative to that kind of historical norm, but we were down 3% relative to a year ago on the chicken side as well. So all in all, cold storage was a good report for us to see on Monday.
Let's talk a little bit about supply and demand, since we don't have a lot of reports to get into. As we take a look at production and the supply side of things, how do we compare to the rest of the world, and what does that mean, and what is that doing for us as producers when it comes to the demand side of things as well?
Yes, I think it's a really good question. You know, we often have been very, very focused on just the domestic supply growth we see here in the United States when we look at beef and pork and chicken. But frankly, when you look at the rest of the world, our growth may have come at an opportune time, at least here in the short term. If you look at beef production here in the United States since 2014, by the time we get to the end of the year, we're going to be up about 9% relative to over that period of time. Yet the rest of the world down 0.5%. Places like Australia, where we've seen drought occur, that's given them record prices, but also cut supplies in Australia. It just tells me that we're growing very rapidly, yet the rest of the world is growing much more slowly than maybe was the case just a few years ago. On the pork side, where we're up 14%, the rest of the world down 1.4%. I think there, we can pretty much point to China as much of the reason why we see the decline in rest of world pork production. And even on the chicken side of the ledger here, we're up over 7.5%, yet the rest of the world only up a little more than 2%. So we've been growing fairly quickly on the supply side, yet the rest of the world's supply growth has maybe been a little muted of late. So I think that's been helpful to us in terms of being able to export more product to the rest of the world as we fill some markets that some of these other major suppliers maybe have left behind.
Obviously, we don't have a crystal ball where we can't see what happens in the long term, but does that position us, does it make it, I guess, does it create a more challenging position in the long run? Because one might think that other countries, if they're seeing the U.S. do so well, that it might be time to grow their herds as well.
Yeah, so you ask a good question. I think as you look ahead, it reminds me that probably the rest of the world's supply growth will pick up in the next 2 to 3 years. Australia likely won't have a drought forever, and as they recover, as others recover, as perhaps the Chinese sow herd starts to stabilize or actually grow, we're going to see the rest of the world's supply growth expand. And if we continue on the current pace we are and the rest of the world expands, maybe that's not so good for us once we get 2 or 3 years down the road on the price side of the equation.
We're going to talk a little bit about NAFTA. It's been a roller coaster of a ride this week. Yesterday, so on Wednesday, President Trump indicated that he might sign an executive order to withdraw the U.S. and terminate our participation in NAFTA. Today, on Thursday, a little bit more muted or tempered conversations and talk about those extremes. How does that impact the markets when you go from one extreme to the other types of trade deals?
Yeah, so markets have really been searching for information related to our ability to trade products with Mexico. We know that this is more than a single commodity issue. It's so important to ag as a whole. And when you go from one day of, well, we're going to get out of NAFTA, which creates uncertainty, so I remind folks all the time, getting out of NAFTA, we don't know what that world might look like for us. It could be better, it could be worse, but it creates uncertainty. And I think that's important that we understand that uncertainty then makes it hard for markets to find direction. You could certainly see folks in Chicago looking yesterday at what was coming in terms of, are we signing an executive order to get out or not, as important to where markets moved. Again, today, I think you could perhaps say some of the strength we've seen in the markets was that collective breath taken at, well, maybe we aren't going to get out of NAFTA and trade with Mexico will remain strong. Again, equating strong trade and NAFTA together might be a too big a stretch, but the certainty we get with continuing NAFTA, I think, is helpful to markets, that's for sure.
And I know as I talked to, it was a story that I was following today and working on, as I talked to folks from the National Pork Producers Council as well as the U.S. Grains Council, a modernized and updated NAFTA agreement doesn't look much different on the ag side of things. How important is it that message gets conveyed now that we have a Secretary of Agriculture in place and we're still waiting for the U.S. Trade Representative to be confirmed, that those conversations with the administration remain strong?
Yeah, so I think it is very important, and I think those messages are getting through to the administration that, when we look at where NAFTA is, it has been very helpful to agriculture here in this country, and we want to be very careful as we think about any renegotiation of NAFTA not to let slide many of the areas where we've seen progress from an ag perspective. So we may be on again, off again as we look ahead as well, until we get a little better sense of direction. But I think the voice is being heard that trade in ag products out of this country to Mexico is important, and we want to do everything we can to make sure that that's maintained as we move ahead, especially in light of, I don't care what commodity you talk about across the board, we've moved much lower on prices, and trade matters a lot more when we talk about $3.50 corn and and a $1.20 fed cattle and so forth. That's very different than a few years ago when we had record high prices. So trading, the ability to export to Mexico, I think will remain very critical for us.
Definitely prepare ourselves, I guess, for a roller coaster of emotions when it comes to what's going on the trade side of things. Scott, as we wrap things up, let's talk a little bit more about, I guess, the demand and what's going on with incomes. USDA released its annual meat PDI report. What are we looking at there, and what are we taking from that report?
Yeah, so first of all, we continue to come off of those record highs that we had just a couple of years ago. Anytime we increase supplies of cattle and hogs to the marketplace, we often see gross incomes fall, and that's certainly the case out of the report we got this week from USDA, down nearly 20% in terms of gross income or cash receipts on the cattle side of the ledger, as cattle prices moved down more than the increase in cattle slaughter that we saw. Even on the pork side of the equation, down nearly 10% in terms of gross income from where we were in 2015. So both of those remind us that the income and perhaps even the return situation for livestock producers has become less favorable, or was less favorable in 2016 relative to where we were in 2015.
Scott, we also saw this week Cargill announced it was selling its last 2 feedlots in Kansas and Colorado. Is that an indication, or does that maybe correlate with that PDI in what's going on the income side of things?
Well, I think number one, it's been a tough business to be feeding cattle the last couple of years, and perhaps that cattle feeding has gotten a little better of late. But if you think about how hard it was to source calves and the prices had to be paid for cattle to be in the feed yard, I do think that that was part of the reason. And you look at those 2 feed yards, about 155,000 head of capacity there. I think it has made folks decide there's things to do other than feeding cattle. And I will always say, when you diversify into these different opportunities, you have to be good at all of them. And perhaps you're seeing someone like Cargill who is saying, maybe it's time to let someone else feed those cattle and let us get focused on the other parts of the business that perhaps we can do much better in if we stay focused there.
Scott, anything else this week?
Well, I do think when you look at that agreement as well, so there is some long-term agreements between the new owners of those 2 feed yards, Green Plains and Cargill. So, in terms of getting supplies of cattle, I think they've set themselves up to maintain supplies going forward. So it's a good diversification, I think, when you look on that front. But relative to anything else this week, I think those are the big issues, and we'll continue to see how things unfold for these markets as we look into next week.
And next week we'll talk restaurant performance index as well as monthly trade data. Anything we're looking for in those numbers?
Well, I think both sides of that equation, boy, we get a good look at the demand side, both from the monthly trade data as well as then what's the restaurant performance index look like. Looks like we've had a fairly good week when you look at stock market and so forth. So we'll see what we get out of that restaurant performance index on domestic demand as well.
Scott, have a great weekend. We'll talk to you next Friday.
Very good, Megan.
To have our weekly livestock market update delivered to your email box every Saturday morning, go to brownfieldagnews.com, click subscribe. You can also submit questions and comments there as well. And for market updates twice a day, check out John Perkins' Market Minute. Have a great weekend. I'm Megan Grebner on Brownfield.